Good afternoon, everybody, and welcome to Afternoon Market Action. My name is Glenn.
My name is Patrick.
And we are going to be your host today for a good 45 minutes or so on talking about what's going on in the market. If you can hear us, by all means, please respond in the chat, preferably with VV Nation, to let us know that we are coming across loud and clear across the airwaves, folks. Love that we have a reach around the globe. People from all over are tuning in, and that's a great thing. Cigar says, hello, Glenn, Patrick, and Joey, VV Nation. Michael says, VV Nation. RD Pasta. Man, a lot of names that I've not seen before, like RD Pasta, Mr. Mex Biker, Lee, Michael, Salim, Mark is here. A lot of names that I do know. Bubba's Lee. I like that, I think. Wow, I can't say that. Zayadin Wace, hello. D3 is good. Viagra. Did you really say Viagra Nation? What is up with that?
I was waiting for that, Mr. Burgundy.
Lower Costa saying hello from England. Again, I love that we have a reach all around the world. Now, Lito says, this is not the bottom. Before the bell yesterday, we shorted CRM and took profits. Great to go. Over 200. Is it 200 watching already? Wow, look at that. I love that. I love that. Way to go. So the problem is I want to make sure you stay here. All right. So we're going to get into what's going on in the market right now. Big move. And I'm going to go take us to the homepage, Joey. The homepage shows a lot of what's going on right now. Market's up. But what is the market doing? Market's coming back into more of a bearish mode. Contra's coming back, says Michael. Absolutely. Do I hold my oil stocks for a while longer? I am of the mindset I still think that oil's a good play, but why is it going down? Because we're flooding the market with our strategic reserves, and that's not a good thing for us, but it is a good thing for keeping oil prices down. I am
until
still
it runs out.
Until when is enough at some point. I still own WTI. I'm always trying to be transparent. I still own WTI. I still think that it's a good play. How many of you saw the video last night about natural gas? Type a 1 in the room. How many of you saw the new video last night about natural gas? Type a 1 in the room. If you didn't, type a 2. And that came from somebody who wanted to know what was going on with natural gas. And you know something, and I think we both try to do, we see ideas that come from you guys, and we try to put that into stuff that is pertinent to you guys. Folks, our channel is not about us. Our channel is about you. So for everyone who's typing a 2 in the room, I invite you. Thank you, Joey. There's the link for the video from last night as well. Keep that in mind. It really does point to why natural gas is going down when it should be going up. This all has to do with midterms. So Michael, as much as I would love to get into that conversation, I won't here. I think Patrick and I, both of us, will try to stay away from that as much as possible. I'll say that. Another thing. How many of you saw Patrick's live stream yesterday about the trading for charity? Type a 3 in the room. All right. Type a 3 in the room. How many of you saw Patrick's awesome live stream yesterday about our second year of trading for charity? Lito says, Glenn, I will have to insist that you do. Talk about politics? Yeah, you can insist all you want. That ain't happening. Not up in here. Not up in here. You can insist all the way you want to. This is not going to happen in here. All right. So awesome. So a great live stream yesterday. If you hadn't had the opportunity to chime in live, he will be back on Friday at 12 o'clock.
Friday at noon.
For trading for charity. It's for a great cause, folks. You have an opportunity to help a lot of people out there. This is Patrick's brainchild, and I think it's a great idea, and I would love for you guys to support that. I would really love that. Vince says he's actually my uncle. Are you his uncle?
I am now.
Okay, then. There you go. He's actually okay. Can you handle a shakedown? Yeah, you do know, Lito, I am a United States Marine. I just want to put that out there. I ain't getting shook down either. All right, so let me ask you the next question. Each one of these moves to the upside. What have they been pushed by? All right, tell me.
False optimism?
False optimism, that's from sentiment. I can say that. But if you're looking at the actual numbers, where have these relief rallies been generated from? Anybody? Thank you, John. I appreciate that. Thank you, Michael. Not hope. Wow, I like that. Hopium. Earnings is another one, but that's not what I'm looking for. What has been the main mover? What industry has been the main mover in each and every one of these rebounds? Not earnings. Come on, guys. I know you know it. Patrick and I know it. Nope, not interest rates. Energy. There you go. Petroleum, oil. Absolutely. And you know something? Transportation is part of it too, Robert. I'm not going to say no, especially the shipping companies. But each and every time we get one of these relief rallies, what does the market do? And if you're going to think that you keep doing the same thing over and over, expecting a different result, that is the definition of what, Patrick?
Insanity?
Absolutely.
Did I get a gold star today?
You get a gold star. That was a good answer. Joey says attaboy to you too. But
let's take that one step further though.
Sure.
You're saying energy, but why does energy all of a sudden have these spikes? Because people think that the Fed's going to start maybe stepping back on their rate hikes. And so therefore the fear of recession goes away, and everybody thinks if recession's going away, then oil prices are going to go up because everything's going to be going back into full swing. So yeah, I think false optimism is a viable answer for that question, because that's the reason why you're starting to see oil prices and energy stocks going higher, is because the Fed considers cutting rates, recession's less likely off the table. So there you go.
I like this statement. Michael says, yeah, but is the sector overbought? That's a good question. If you think about it from the longer perspective, Michael, oil had been beaten up a lot until we got into this perceived recession. When inflation was transitory and oil was rising. Prior to that, oil had been getting stopped. Why? Because we were producing a lot of it. All right, just think about it. We had been producing a lot of it, keeping the price of oil down, keeping the price of gas at the gas pumps down. Then when a new administration comes in and says, no, we're going to do away with fossil fuels, and people go, holy crap, and we stopped drilling as much, drove the price of oil up. But prior to that, for the last 4 years or so, oil has gotten stopped. So, Michael, I understand the statement about is it overbought? So I bring it back to you. Is it? I'm just curious. Is
and
it?
Also keep in mind, when talking about overbought, oversold, just because something is overbought or oversold doesn't mean it's going to instantly turn around. It can stay in overbought or oversold territory for quite a while before you start seeing the pullbacks.
I agree with that. And someone said, don't sleep on uranium. I'm still playing uranium as an alternative move to oil or fossil fuels, or even, the EV space. Uranium stocks are on the rise, but it's going to take a while. It's going to be a slow upward move. More and more countries are getting on board with building, and we did a story about that, right? About uranium and why it was going up. More and more countries are coming aboard on building new reactors, and uranium is going to play a big role in that. But it takes a long time for these buildings to actually be made. So uranium is going to be a slower play, but slowly but surely it is moving up. All right, so there you go. All right, so a lot of what's going on in the market is fueled by a specific industry, which is being oil or industry or energy. And each time we had the relief rally, in order for me to say that this, and Patrick, you chime in on this, in order for me to say that this run up is a real run up, What do you need to see? I need to see more of a broad market move pushing the market higher, not
We need
just
to
in
see
industry.
we need to see Powell actually stating that they're going to start slowing down the rate hikes and start backing off of that.
And once that happens, the market's going to take off like a bat out of Hades.
And
That
until
is
he actually
that is
says
for real.
anything, you can't go off of this false optimism that the Fed's going to slow down rates. As long as inflation's still high, which it currently is, you know, yeah, you can have somebody pump an article out every once in a while saying, "Oh, I heard a rumor that he may start slowing down," but until you hear it from himself, you can't go off of that. Simple
I agree.
as that.
It is optimism. And I still think that if inflation, and he doesn't see inflation moving down the way he'd like it to be moving down. So I think he's going to stay hawkish. And Patrick's right. I'm thinking unless he says it himself, it's not going to happen. Fireblazer says, what about thorium as an alternative to uranium? I don't know much about it. Maybe there's something I look into. Maybe it's something that Patrick looks into, but I don't know much about thorium.
I mean, I know about vibranium, but not thorium.
That's because you're a Marvel fan. That's why. That's the only reason why you or any of us would know about vibranium. Sigh. Rimor says the Fed is focusing on core inflation, not regular inflation. Patrick, you want to elaborate on that? Inflation, in my mind, is inflation. But is it,
I mean,
core looks at food and fuel? Yes.
Core inflation just basically is their cherry picked list. Actual inflation is everything.
Okay.
Unobtainium. There we go.
What the heck is unobtainium? Wow, really? All right. So that's a picture or view of what's going on in the market. Patrick and I have both given our insight on why the market is still rising the way that it is at this particular point in time. Our market timing signals, which we won't talk a lot about here, but 3 out of our 4 market timing signals are issuing an up call. And I think we're both a big fan of taking what the market gives you. If the call says go, go, but I will tell you to be careful. All right. If you look at our guidance, and everybody who's a subscriber gets this guidance every single night, VectorVest advocates caution when buying stocks at this time. That is what it is. All right. So even with 3 green days going up, the guidance still says be careful. And I'm going to just tell you all to just be careful. Any comments on gold and silver, guys? Gold is precious metals are going to still continue to get hit more while the dollar's strong. All right.
Yep.
As long as the dollar is strong, gold is going to have a hard time moving up. It is one of my 4 commodities that I like overall, which are oil, uranium, lithium, and gold. Gold is the weakest out of my 4 commodities that I like at this time because of the strong dollar. Oil, I'm still bullish on overall. And wait till the cold months hit, folks. Uranium, I'm still on board with. And lithium, I'm still on board with as well, especially for EVs. So that's to answer your question, Ramor. All right. So that's a feel of what's going on in the market. I will, let's go bring up, I'm going to bring up the SPY instead of looking at the VectorVest composite, because again, not everyone in this room are VectorVest subscribers. So let's look at something that everybody can look at. And let's bring up a 3-month graph on the S&P. Look at that. All right, look at the S&P. We have support and resistance on our graphs automatically drawn for us. How about that? How cool is the flexibility behind the system? It will automatically calculate support and resistance for you. Look at what we've done. This is a 20-day exponential moving average. We broke above it. That's great. What's moving this? Oil and energy. And where did we stop with today's candle so far? Right at a level of resistance of 389.53. In order for the market to say that it really has up legs to the upside, let's go see if it can break through that level of resistance. But an open candle, which means the price is higher than the open, but a lot of wick at the top. I'm just saying, for this run to be real, it needs to show me more than what it's showing me. What did John say? Someone says, good point, John. John says, they also have great dividends now. Oh, on which one? Coal is going to skyrocket. Coal is a big reason how we get electricity. I believe it's either, Patrick, back me up on this, 40 to 60% of our electricity comes from coal, does it not? It's one of those. I believe
I don't know.
it's
I know
40 to 60%.
I know we shut down our production here in the States and just bought it from China for the longest time, but I don't know percentage-wise what that comes down to.
All right. I think it's somewhere up in there. All right. So again, that's what's going on. Instead of looking at the VectorVest composite, we're going to start looking at things like the S&P 500 to gauge what the market is doing. On Mondays, though, I will still give a little bit more information on our market timing in my live stream for the midday market update. All right, let's go into the stories that we have. And Patrick's got a story, and let's go talk about the story.
Yeah, so this comes really mainly due from the Monday video that we had here, where I gave 3 picks for earnings plays to potentially look at. Enphase was one of them. I talked about the fact that, one, we've been following it for quite a long time. The company consistently beats earnings. They're consistently growing their earnings. It's a really strong, fundamentally sound company. And, well, we had earnings report last night, or this morning, I believe it was. And they beat, and they had a nice 10 to almost 15% pop after that announcement. So there you go. They're just one of them that we have so far. But yeah, earnings are still rocking and rolling. They've improved. What is it? 2022 adjusted earnings, $1.25 a share, improved by a solid over 100% from the 60-cent reported a prior year. So over a year, growing their earnings by triple-digit percentage-wise is absolutely phenomenal. So just goes to show, fundamentals are core, especially in this current market. The whole speculation aspect of the market really seems to be subsiding right now. And so if you're going to be taking any long positions, especially if you're planning on holding for more than a day, you got to focus on the fundamentals and make sure the companies are sound as well.
Excellent. Random Dave. Do you know what this is? It says, I liked your show and promoted / shared it many times. You totally ruined that with me.
I don't know. Some dude just randomly.
Is he mad? You mad, bro? I don't know. What happened?
You good, bro?
I said something about his.
I don't know. I've just been ignoring it.
Okay, I'm curious to know.
That's all you can do.
I like.
You're gonna have this when you have this many people here. You're gonna have random people coming in just.
I try very hard to accommodate the chat that we got going up in here. So I don't know what we did wrong.
Mr. Burgundy, it's okay. You can skip that one.
All right, here we go. Let's go. Yeah, I know that would be me, wouldn't it? And I could picture Joey in the front of me with a prompter going, and don't say this. And I would go, and don't say this. That would be me.
You used to do it in the jockey club, and I'd moderate for you all the time too, years ago.
Yep. All right. Here's one of my stories in regards to earnings. And again, Patrick did another great video this week in regards to earnings plays for the upcoming week. Alphabet is having its worst day since March 2020 when COVID shutdown started in the U.S. You're welcome from... Okay. Wow. Okay, so now I see what Random Dave said. Wow. Okay. It is what it is. I asked you twice.
Just
okay.
Let's keep going.
I'm gonna let that go. I'll let VV Nation take care of that. We try very hard to accommodate everybody in this room the best.
All right.
We can.
So what about Apple?
It's Alphabet having its worst days. Shares of Alphabet dipped as much as 8% today, a day after the company released third quarter earnings that missed top and bottom lines. Revenue growth slowed 6% from 41% a year earlier. And look at this, contends with continued downdraft in online ad spending. So, and I think a lot of the move, along with petroleum and energy stocks, Patrick was right in that a lot of anticipation was that a lot of these companies, a lot of these bigger companies that we were going to report this week were going to be good. And we'll see what happens. All right. So I'm just.
Going back into it, though, that's one of the things on my Monday video that I made sure to address is that if you notice, typically, me, I look at tech, I look at the tech stocks, all of that. And I stayed away, this earnings season. That is the one thing I am doing is staying away from tech stocks. I don't think it's going to be good. This is now the third quarter. This is plenty of time for the pain to start showing on companies' balance sheets. And yeah, that's what we're seeing. So that's why, the 3 stocks that I chose for this week that are earnings plays are all outside of tech, because I don't like what's going on with tech, and I don't think earnings are going to be good for the FANG stocks or really just tech in general. So,
and Michael is asking about FNGD. I think that's a good play based upon what Patrick just said. The FANGD contra ETF is a great place to be, especially if tech stocks continue to miss. Question came up is, are we going to read articles the whole the whole time? The answer to that is no, but we give some insight. Wow.
But welcome to our stream.
Absolutely. Welcome to our talk show. Oh, wow. Today we got some stuff going on. All right. LNG. I did a video on LNG. Was it last week or the week before? And then I did a follow-up on natural gas last night. LNG, and Patrick's got a feeling about this. He talked about that. So shipping stocks still rising. The Upworld LNG Shipping UPI, the world's only stock index focused on LNG shipping companies, gained 5% last week, blah, 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 blah. So I talked about top 10 natural gas stocks to keep your eyes on, but I did give a bonus of 3 LNG shipping companies. And Glop was one of them. I wrote them down. Flex, which was FLNG, and DAC, Danios. It's in the video. But Patrick, what do you think about LNG at this time? I know I heard you say
LNG has been a great phenomenal stock for a long time, and nothing lasts forever. I think it definitely has potential long term, but short term, there's definitely some warning lights flashing on the charts.
Okay.
And that's why the last couple of weeks I've not posted it here, is because of those warning signs. Just waiting for the confirmation of those. But yeah, LNG is definitely due for a correction in the near future.
Now, even with the correction, based upon what's going on with LNG, with natural gas, I don't feel that the correction will be prolonged based upon people are going to need this stuff.
It'll be just like oil was. If you want to know what's going to happen with LNG, take a look at some of the big oil stocks. They were running for a while. They had a pretty severe sell-off, but now they're getting back to that point where they're back to their highs.
What was the sell-off from? Based on demand going down and
over the
a lot
summer,
of supply out?
Based on recession.
But based on demand, it was demand. People pulled back from, especially from gas perspective. They weren't paying the high. A lot of people say, "Screw that! I'm not paying this kind of price." The demand slowed. I don't know that that's going to happen with LNG. My opinion. I think that the writing is on the wall that natural gas is going to be much needed coming into the cold.
I'm not disagreeing with you, but you look at, the main driver behind natural gas right now is Europe. You look at Europe, Germany has their 100% full on their reserves.
93%.
Building up their inventories, having their reserves completely full.
And
they're preparing. They've already been preparing. They've had a whole year to prepare.
So then, what do you think that supply that they have is? How long that supply is going to last realistically?
At least through the winter time. That's what their supply is for.
I doubt very seriously if it's going to last through that. I think they're going to blow through it a lot faster than what most people think. Again,
I don't think they will. I think they've had a whole year of planning, and they have a pretty good idea of how much they're using and how much they're going to need.
All right. Only time will tell.
And also, you look at the price of natural gas compared to what it was 6 months ago, even outside of the winter months. It was trading at almost $9, and now it's back down to $5, where historically it's usually in that $2 to $3 range. So it's still over 100% higher than historically or the historical average, but it's definitely well off of those highs of the $9 almost for natural gas. So yeah, natural gas is definitely going to be a useful commodity. It's definitely has its potential to see a pop. But with a full year pretty much for Europe to get their act together and get on top of this before stuff hits the fan, to put it lightly, I think, people are way underestimating how prepared Europe is to deal with the winter. So.
And I think just the opposite. I still think that even with that supply, those levels of supply, I think they're going to blow through it a lot faster than what most people think. But again, that's both of us giving an opinion, and that's fine. But
I think like I said, LNG, could definitely have a major comeback, but it's definitely, I mean, it's way overextended at this point. It's starting to see volatility now. It's getting ready for a correction. I just wouldn't want to be sitting through it. And if you're not in it, if you already have good gains, tightening up stops to make sure you're locking those profits in isn't going to hurt you. I'd rather lock profit in than sit through a 30, 40, 50% correction and then, get into the emotional trading of hoping and praying that it comes back.
And I don't think it's emotional trading. The video that I did yesterday goes a little bit against what you said.
No, I'm saying if you watch a 50% correction one of your stocks, then yeah, you're going to have emotional trading. Simple as that.
Absolutely.
Yeah, that's what I was saying is the emotional trading of wishing and hoping that it comes back at that point.
Yeah, hopefully you don't put yourself in that situation. All right. Next, another industry that's rock and rolling is airlines. And this story says, is now the right time for investors to turn their attentions to these airline stocks? I'm going to show what those stocks are from this story. But it still comes back to me, if we're in inflation, and I saw a story that people who are making $100,000 or more a year are now living paycheck to paycheck because of inflation. How are these airline stocks, the cruise stocks, the hotel stocks still looking and very happy about forward bookings? I'm not sure how I look at that, except for people are just have been tired of being cooped up for the last couple of years and are really trying to get on vacation and get away. That's all that I can see from that perspective.
It's called debt.
Do you really want to go into debt to go on vacation?
Yes, we do this as a country consistently. Not only our government, but also people do this consistently. Look at 2007, 2008. People took record numbers of debt, and we're back at those levels, if not higher than where we were that long, or 10, 12 years ago.
And we're looking, Cigar says, people borrowing to fly with credit cards. Just what you said.
Yeah. People, the average American, Glenn, I think you give them way too much credit. They are not fiscally responsible, even in the slightest.
Well, they should be. Well, you know something, you can't blame them if your own country is not fiscally responsible. Oh, okay. I'm going to keep on moving past that. We're not going down that path. Last story I got is GM grabs EV market share from Tesla. It eyes more gains down the road. I still am a fan of the EVs as a space for you guys to make money, as long as the companies are able to supply the cars for the demand that's moving up. More and more people are willing to spend a lot of money on EVs, Teslas. I mean, if you look around, how many of you at least once a day see a Tesla on the road? Type of one in the room. I see Teslas every day. Every day.
I see a lot of them, yeah.
Absolutely.
I see a lot of the Polestar though now too. I haven't seen those driving around.
I haven't seen any Polestars. I've seen Teslas. I've seen Rivians. All right. That's about it. As far as I've seen the Bolt. Of course, we've seen the Bolt, but a lot of Teslas on the road, which tells me a lot of people are turning to the fact that EVs might be a way to go. So a Lucid. I did see a Lucid as well. All right.
But here's the thing though, is just like if you recall 2007, 2008 with the auto industry, what happened? Everybody went out, right before the stuff hit the fan, and everybody loaded up with a brand new car. Then all of a sudden, going into the recession, nobody wanted to buy new cars. Right. And so the auto industry got hurt because they weren't planning ahead and they weren't saving enough because they had this big boom. They thought that was going to continue forever. Well, same thing's going on right now. Everybody's buying up these electric cars, but what happens when everybody's got a new electric car? Now they don't have to go out and buy one for another 5 to 10 years, roughly, hopefully. And then sales go down. I mean, it's a cycle that we just don't seem to ever, really try to learn from. I mean, as much as I like GM, all these car companies are starting to do the same thing. Everybody had an issue with supply chain. They couldn't get cars. Now everybody rushed out to go buy new cars. Eventually that's going to catch up, and let's see if they can actually learn from their mistakes from the past and make sure they set some, a rainy day fund aside for themselves so that way they can get through some issues. Dude, all right. I'm just gonna. I don't want to deal with that. I'm just. Bye.
Yeah. And I think that was
I'm not gonna. Yeah, we're just gonna
first
move on. Like nobody's got time for that.
watch all that.
You want to bring drama in here? I
Nope.
will be the
I I
first to
I,
time you out.
I don't, but there's a reason why I'm watching that one.
Well, then they can take care of it somewhere else. Not
Okay.
not now. Simple as that.
Hold on. There's a real reason outside of what you do know why that person is being looked at. All right. Let's go to our viewers tab. So that completed this section of reading articles. Let's go start talk about the picks that we have in regards to that. All right. And John says, great point, Patrick. Once a recession hits hard, people are not going to spend all that money on EVs. I think that once a recession hits hard, nobody's going to be spending a lot of money on a lot of things, to include all of the travel, all of the hotels, all of a lot of things.
Look at the new Sierra, the EV Sierra Denali they came out with. It's starting off at $117,000 for an electric truck that can't even tow something. Like, come on, man. Like,
and that's crazy.
GM,
as much as I like the EV space as a place to make money because the demand is there. But you're right.
Everybody's trying to go for these big trucks. Nobody's going to buy them except for saying that, hey, I drive it. Like the Hummer. I've seen one electric Hummer driving around, and it is the worst thing ever. Not only is it not efficient at all, it can't even pull anything.
And if you're going to put out, even if it's an electric vehicle, it's got to be able to do what the gas-powered vehicle can do.
Exactly, and it can't. Simple as that. As much as I would love one to just drive around, I'm not going to spend $117,000 before sticker or before markups and all that to drive something for a daily driver. Just doesn't make a lot of sense.
Okay, I'm with you. I'm with you 110%. Market news. Here's all of what all of the indices are doing. Our composite is the big leader right now, up about 1%. The Dow is only up 0.7. The Spider is up 0.2, and the NASDAQ, the tech stocks, are down. So we got a mixed market today. Let's go. I'm not going to do customer picks yet. We're going to come back to that. I'll do my picks.
Dan just commented as well. Credit card debt in the U.S. hits all-time high of $930 billion.
That's a lot of money.
There you go. That's why.
That's a lot of money. So if people are having a hard time, so that does answer the question. If people are having a hard time and they're living paycheck to paycheck, but they're putting all of these trips, booking these flights, booking these hotels, booking these cruise ships on their credit card, you're right. It does come down to they're willing to take on the debt to go on vacations.
Because people learned from 07, 08 that, just because they file bankruptcy doesn't mean it's the end of everything. Their credit rating is screwed for 7 years, and then they're back at it once again. I see this mentality all over Wall Street Bets. It literally is taught people that, hey, money really doesn't have as much value as you think. I can make it all back again. Bankruptcy is not as bad as everybody makes it out to be. I'll take a hit on my credit rating for 7 years and then just be right back to it.
And Salim says, pay now, worry later.
Yeah.
And if that becomes our mantra, we're going to be in a world of hurt, people. We're going to be in a world of hurt later when we do have to pay the piper. Glenn, how about the fact that mortgage companies are doing these 2-year low payment mortgages? Didn't 2008 teach us anything? Hallelujah. I posted a story on Twitter in regards to that Fannie Mae and Freddie Mac are looking at a different kind of credit score. Instead of the FICO 10T, and another credit rating to get
the
people.
Social credit rating from China? Are we getting that now?
Is what?
Are we getting the social credit rating from China?
No, I don't think so. I hope not. But right now, and why? Because home sales are going down. They're trying to do whatever they can to get people into a home. And are we going to go back through another 2007, 2008? I hope we don't. Thoughts on crypto? I still think we're in crypto winter. I think that there's a lot of other people out there pushing crypto. Patrick, before we move on, what do you think about crypto?
I think there's still more to flush out of the system, but I think a lot of the negative side of crypto got flushed out over the last 9 months. But But on that note, I will be talking about a little bit about crypto stocks tomorrow during our mobile coaching stream at 11 a.m. So
Excellent. All right. Well, UUP trending up be a big headwind. If UUP, which is the dollar, does keep trending up, again, a strong dollar hurts us. It's a good thing, but not a good thing. It hurts us because people have to buy our goods at a higher price.
And also, right now, we got 220 of you guys out there, VB
Holy
Nation
smokes.
members
That's
watching
awesome.
right now. Make sure hit that like button if you haven't done so already. Let's get that number up. Let's see if we can get half of you guys watching right now to smash that like button, because
It
all that
looks
helps
like
us
we
out.
should blow through my regular thing of 100 today. It looks like we should blow through it. What did Dan says? Is the U.S. Treasury market getting disorderly? And what can the Fed or Treasury do to prevent a total bond meltdown? Patrick?
Nothing.
Why did you take what I was going to say? Because I was going to say the same thing. I think that we're both in the same mindset. I don't think you can prevent the bond meltdown. Again, that's what I think.
I mean, they can try to artificially manipulate it with QE, but they do that, then the dollar's gone.
Yep.
I mean,
and if you do,
that.
If you go back to QE, what happens to inflation?
Keeps skyrocketing.
Absolutely. And then we're going to go from 40-year highs to 50-year highs to 60-year highs on inflation.
And then eventually we're all turkey with 45% inflation rates every year and 25% interest rates. So that'll be fun.
How about this? Salim says, will Glenn sing? There's a price. What's the price for? We got to hit a goal of what? $1,500?
Hold on, let me see if I can do this.
Something like that. There's a price point for donations that we have to hit before I can sing. It's a milestone. There it is. Oh,
2,000.
Oh, look at that. Glenn will sing for 2,000. All right. So we get up to $2,000 as far as it's 1,500. Oh, 15. It is 1,500. 2,000. Okay, I got it. 1,500. Glenn will sing. All right. So there you go.
And if you use !tips, the command in the chat, that'll bring up the links for donating as well to the Trading for Charity event. You can do that too.
Yes, you can. All right. You put regulations on crypto, it will crash. Well, that's always been the issue when it comes down to crypto.
I heard
if
something.
the government
I
was
going to
get
actually
involved,
verify this. But regarding that, you've heard the Sam Friedman, whatever his name is, the 3-name guy in crypto. Do you know who I'm talking about? Sam Friedman Bank or Bank Friedman's, whatever his name is. He's actually been buying up. He's basically been floating the whole entire crypto market.
Really?
Oh, yeah. He's been getting in on every single possible thing, trying to buy exchanges, trying to buy influence in other areas. And he's actually pushing for legislation to basically take full control of it or make it regulated. And he's been like one of the big guys in the crypto space. Yeah, Samuel Bankman-Fried, whatever his name is. Yeah, that dude. He's been pushing legislation to get this regulated, so basically he can corner that market and be the one guy in there first, so he has the most control. So if crypto does well, he will be probably the richest man in the world.
So think about this: if everybody didn't want crypto to be regulated, they wanted it to, but if it gets regulated, does it become popular by default from that perspective? If the government,
well, it has to be regulated because you have central banks across the world trying to come up with these digital currencies.
Mm-hmm.
U.S. is doing it, China's doing it, Russia's doing it, EU's probably doing it. But I mean, yeah, you have to put out these laws in place there. But because to go with the cashless society, you have to have that regulated.
Crypto came out under the premise that they never wanted that to happen, right?
Yep.
And so I don't know. That's gonna be an interesting story. All right, let's go look at my picks from last week. We'll do my picks first. LNG, WTI, airlines as they were on the rise, and DRV. All of these were all bullish for me. All right, let's go see what they did over the last week. 1019. Let's go quick test all of them. Man, not so good. DRV got smoked. That is the Contra ETF. Somebody just did something. What was that?
Hey, Mark coming in with a $102 tip.
Is that
for the
$102?
Levine Children's Hospital. Thank you for that,
Nice.
Mark.
Way to go, Mark.
Appreciate that.
That is awesome.
Thank you very much.
Yes, sir. You're looking at DRV, the bearish side of real estate, especially due to mortgages rates going up. Didn't do nearly as well as I expected to over the week. But oil and the airline did, and LNG was down just a little bit. The market was up with this nice move for the past 4 days, up almost 4%. It made money, but DRV hurt me. All right, let's go to my picks for this week. Let's stream this up. I got LNG again. I got airline again, air transport, and American Airlines. I got 3 airlines, especially knowing that people are willing to put, we found out today, people are willing to put their travel onto their credit cards, pay now, worry later. Airlines are on the rise. Cruise ships are on the rise. Hotels are on the rise. So I've got 3 of those. Google and Meta are my bearish ones going into next week. Big hits because of earnings going down today. All right. So that's all I'm going to say.
Are you taking Meta as a long trade?
No, it's short. Both of these to the downside. Now, when you said that LNG was overbought, I still don't. These oil stocks, in the majority of them, not oil, but a lot of these oil, energy, and natural gas stocks are going to be undervalued because they've been so beaten up. Great upside potential, great safety, and they are in an uptrend, growing their earnings at a clip of 47% a year. A lot of these stocks, because they've been beaten up so much, are going to come in as undervalued. Now, and actually, the only one that I really want to look at is that one. Let's go view the stock graph. And I'm going to put into place what Patrick said. I'm going to put this on a 1-year graph. Go ahead, talk to me.
Real quick, you've done the half-day seminars that we used to do where we would do two city events?
Yeah.
And we do the 4 tips to know when to sell. I do it on our mobile coaching streams a lot too.
Yeah.
One of those tips is noticing volatility. When volatility starts increasing, that's usually an early sign that the direction may be starting to change.
And I'm not getting that.
I mean, look at it. Look how
somebody else just look at that. Tyree, way to go.
Woo.
Tipping. Look at that. Look at that, Patrick.
Thank you very much.
That is beautiful.
You guys are amazing.
That is
Thank you very much.
Beautiful.
I hope to see you there on Friday at noon for our Trading for Charity stream. Trust me, we'll find some good trades and easily make well more than that back for you guys. So make sure to be there every Tuesday and Friday at noon Eastern.
Now, 427 says LNG showing a bearish divergence in the MACD.
Yep.
Not one of the indicators that I use a lot.
Starting to show, man, all the warning signs are popping left and right, just like I said with DRV 2 weeks ago.
Okay.
And we're seeing those warning signs right now. I'm not saying it's going to be going down forever, but at the same time, if you have really good profits in this, I don't want to see I don't want to see BV Nation give all those profits back.
And I'm for that. No matter what stocks you get into, I'm all about making sure you have stops in place. Always. But I'm looking at a couple of things. 1, it's sitting in the channel. 2, it's still above a level of support. 3, it's above a 20-day exponential moving average. But I do see the pull off from this level of current resistance. I do see that, but it's petroleum, energy is still the major makeup of all of these relief rallies that we're having. And the earnings per share still looks amazingly good.
Oh, yeah. I don't disagree with that at all.
All right. So that was the only one that I really wanted to take a look at the graph. The airline stocks are all moving up. They all have good relative values, but it's because they've been beaten up. The safeties are not there. These are more aggressive plays. But that was the only one that I want to show a graph on. Patrick, let's go look at your picks from last week. Here they are. I think you only had a couple. There you go. And let's go take this back 1 week to the 19th. Let's do a quick test. Patrick's picks 8.64% with the move of ISRG. Good pick.
Ooh.
If we look at that, that's a nice move over week, man. Netflix. I didn't think Netflix was you bullish on that? I didn't think Netflix was going to go up the way it did.
Yeah, I mean, it's been beaten down. The chart, we looked at the chart, it showed a bullish divergence starting to form. And I mean, with the news that their new ads are coming out, basically the cable version of Netflix is coming out.
No.
I mean,
all right. Well, again, a nice pick, up almost 10% over the week. Good, outpacing the market. Way to go, bro. Your Patrick picks new. Stream it. And Patrick does a really good job of analyzing stocks in less than 30 seconds on his deal. So I'm going to leave that up to him right now. Go rock and roll.
So yeah, all of these stocks, I'm not really looking at overvalued, undervalued. So the value aspect of things really didn't come into any way, shape, or form into my decision process for this week. 3 of these stocks came from my video on Monday. Enphase, we talked about the article. They beat their earnings, getting a nice pop here today. It was up over double digits earlier this morning. Love, Glenn brought the article talking about airlines still seeing solid bookings. Love reports earnings after hours today, I believe, if I'm not mistaken.
I believe you're right.
You look at the chart, which we'll take a look at in a second. Their earnings just consistently rise over the last 12 months at least. Companies making money. Earnings or airlines are reporting really strong bookings. I like this one. Northrop Grumman was a aerospace and defense stock. So we had, as of Monday when I was getting ready, coming up with an idea for what to do with the video or for the video, I saw a lot of, Lockheed Martin reported earnings already and had an astonishing earnings report. Beat revenue, beat earnings. So, we've already seen a little bit of a glimpse into what to expect from Northrop Grumman. With everything that's going on over in Ukraine right now, aerospace and defense, they've been basically trying to pawn off their old stuff, pushing it over into Europe. And that way, these guys have more room in their warehouses to create the newer, more expensive stuff to sell to the governments. So, yeah, I see NOC having a really decent run as well. Maybe not, because this is more of a smooth and steady style of a play. So maybe not, the bigger pop like we saw with Enphase, but, at least a nice little pop and a nice steady rise continuation from what we've seen throughout the years with NOC.
Hey, before you go on, a question came up. Are cyclical plays out of the window in this market?
I think cyclical plays are going to have a tougher time.
Some headwinds. I think with the overall market, I'm with you. Keep going.
When you don't have the wind to your sails, when you don't have the overall market moving in your favor, there's not going to be as much that you're used to seeing with cyclical plays. So make sure to adjust your plan appropriately is the best guidance I would say for that one.
I just wanted to answer it because that was a good question. Go ahead. Now keep rocking.
All right. And then last but not least, GME. Earlier when I put this in the list, it was looking ripe for a breakout through a major resistance zone. It's been in a tight channel for the last month or so. It was right up against that point. We hit it yesterday. Then all of a sudden, looks like about an hour or two ago, the market decided to reverse course. Probably some profit taking before GDP data comes out tomorrow, most likely. But if that GDP data comes out and gives us, insight that could potentially back up these rumors that the Fed is starting to consider reversing their stance on their tightening plan that they're going through right now, that could easily make all things rise. And GameStop, whenever the market goes up, it typically blasts off a lot more than the average stock out there. So almost trades like a leverage ETF in a way. But now market started turning back around for the last 2 hours, and we've seen it really correcting, coming out of a decent gain for the session, turning it into a pullback right now. So I'm a little hesitant on that one, but I'm still going to keep it in here. I'm not going to make any changes. I'm going to stick with my plays for this week.
Excellent.
But looking at the stocks, 2 out of the 4 have good long-term potential. 2 out of the 4 have less risk than the average stock out there. 3 out of the 4 are at least in a short-term uptrend, a slight short-term uptrend at minimum. Then 3 out of the 4 have a VST rating greater than 1. So not bad on the overall scores. Obviously, GME is going to be the speculative play. But if we take a look at the graphs, this is where we really start to get in and where I do a lot of my analysis. So end phase, really nice earnings. You had the big pop. I mean, I want to say I didn't expect this, but I did. So granted, overall market starting to reverse course. Now you're seeing some weakness coming into it, but it's still holding well above the lows for the session. So I like the play. This could be a nice run up if we get follow through tomorrow as well. Next one, getting into it. Love was rocking and rolling. Still looked really strong. Earnings per share, put it on a 1 year. Look at that earnings. Company is making money and expected to continue to make money.
You know why it's making money? Because it's coming out of all the pandemic stuff.
Exactly.
It got beaten up. So as much as I want to be behind the airline stocks, it's tough for that reason. Even the stocks that I pick, it's just
But I mean,
tough.
you have this long-term 1 year bullish divergence with earnings and price action.
Yeah, I hear you.
As we say time and time again, earnings is the engine that drives stock prices higher. So
absolutely,
if you can find this kind of an opportunity, you need to take advantage of it. But, we need to, I think earnings are going to be good, and we could easily be back to retesting that level of resistance around 39 if the earnings are solid.
I got you.
And especially, I think more so than just earnings, I think a lot of it's going to come down to forward guidance.
I agree with that.
It's going to be really, really critical for some of these plays during their earnings calls.
I totally agree with that.
NOC, company's earnings flattened out a little bit, but still rising over the last 12 months. I mean, that price action, nice steady rise from bottom left to upper right. Really consistent play, and with more money going to be going into aerospace and defense for the foreseeable future. This could easily be another more consistent, more steady Eddie style of a play.
I agree with that.
And then last but not least, GME. It's already drawn that on the graph for us, so we don't even have to worry about that. But we've seen a nice tight channel between 27.90. I've been going off at 27.80, but we'll go 27.90. That's fine. And then the lower end at whatever that number is. Red on red.
That's sitting at 23.93.
There you go. So it's been in this tight channel for about a month or so now, a little over a month and a half. And we hit it yesterday, pulled back a little bit, ran up again. It was looking like it was going to break through again, but then overall market has shifted. We're still in that sideways channel. I think whatever's going to come from this GDP data coming out, what is it, tomorrow? Or was it today? There was some data that was coming out either today or tomorrow. When that information gets out, I think that's going to give a nice little run up to the markets, and we're going to see a lot of stocks starting to make a little bit of a run, especially going into elections coming up in the near future.
All right. So
I don't think that's going to be long-lived, but I could definitely see that case. I'm seeing it in a lot of charts, a lot of bullish divergences starting to form, similar to what we saw right before the summer of this year.
So I'm looking at this stock. It could be
a short-lived one, but there's definitely looking like a good case for it.
I'm looking at this stock. What did you just say about earnings? I put it on a 1 year graph. What did you say about earnings? Was the end? So
here's the way I talk. Here's what I'll say about that.
Okay.
I get it. Company hasn't been making money over the last 4 quarters. That is fine, because what they've said in their earnings calls is that, they've been working on, they realized the company was in really bad shape when the board got changed over and they got Ryan Cohen and all that. So over the last 12 months, they have been spending a lot of time and a lot of money getting the company back up to par with where it should be to bring it into the current economy that we're in.
I just look at if for the person like you.
Well, hold on.
Okay.
So they've recognized that. They've even stated that, hey, we've been trying to get the company back up to where it should be. It was really beaten up, There's a lot of things behind the scenes to get it back on pace, but we feel like we've gotten it there now. Our next goal, our next focus going forward is going to be back to profitability. So they've nailed everything so far that they've, lined up, or that they've at least given out in previous earnings calls. Their new goal, or their new mission, is to drive profitability. And I think next earnings call, we're going to get some insight into that. And that's what, we're going to be looking for. So yeah.
But I look at you as the person you are when you talk about the stocks that we should be buying, and you're really good at day trading, super good at it, better than I am. I'll admit that. And VV Nation, I straight up admit that. This stock, along with the AMC, along with the rest of the meme stocks, man, it's tough. It is so here's super the thing, tough.
Is it goes in cycles, though. It has these big runs, these crazy runs from time to time. No real reason for it so far that we've been able to find. And with this tight channel, it looks like it's setting up. And based off the cycles that it's been in, we could be in for a new big cycle coming up in the near future that can break out.
I just think that if you just look at the stock just overall, no matter which meme stock, and let me tell you, I've played the GME, I've played the AMC, I've played them both. But then I got back to the basics of what we do as content providers to teach people. Hold on. I gave you hold on.
It's a speculative trade.
Hold on. I gave you, just slow your roll, bro. I got you. But when we look at from the perspective of our software and what we do and how we do, I'm just voicing my opposition. And again, I like that we differ in opinions on some stocks. That's a good thing. And just putting it in the perspective of what we do and how we do, the software is doing what it's supposed to do. The graphs, we always say the graph is worth 1,000 words. The graph is worth 1,000 words. The earnings is the engine that drives the stock's price higher. And I understand what they say that they're going to do. You know what I need? I need them to show me something. They ain't. It is not. So that's as far as I'll go with that. But I know how you feel about this stock. But what do we tell people? It ain't about emotion. So,
and right now, I mean, I wasn't even going off of that. I was going off the technical aspect that it's been in a tight channel. It looked like it was getting to break out. And if it breaks out, we know that this thing can run pretty quickly.
And what does it do after each run? After each run. No. That ain't pulling. That's a lot more than just pulling back, man. That's a pullback. That's smacking you in the face. That's smacking you in the face. That's smacking you in the face and in the head. Right. Now, again, I think this is healthy for the channel when we talk about stocks and we disagree. You're going to feel the way that you feel. I respect that. All I'm looking at is what we teach people and what we see in the graph. So that's all that I'm saying. And I know that no matter what I say, I will never change your mind. And I'm okay with that. And I'm okay with that. I'm just looking at what we teach people and what we see. And that's all. All right. So I think that was healthy. Well, Buffett is a whole different animal for 27. All right. Buffett is not going to he's going to take value plays. This ain't a value play. Patrick is on point when he says it's a speculative play. So I'm with him on that. It is a speculative play. All right. And it all depends on what you feel, what you think. And Patrick's done a lot of digging on information on it. And I don't think there's anybody out there who's got a better perspective on the whole GME trade. I just say for me, because I've played it and I've made a little bit of money, I lost a little bit of money, I think that the stock has got to show me something. If it breaks out of this, it still has the headwinds of coming up to this level of resistance. It still has to come to this trend line overall. So I had a story, I didn't even want to talk about the story anymore. But there's a side of the story that says 5 big hedge funds are getting into it. Could that back up what Patrick's saying? Could be, and that's fine. But I just, as an investor, as a trader, as I look at this stock, I just say be careful. That's all. All right. I was going to look at. You still want to look at their stocks?
We can, yeah.
All right, let's do that. Customer picks. We got 6. You want to go every other one?
That's
or do you want to take the top 3 or bottom 3? I'll take the bottom 3. You take the top
bottom.
3. Shush! I'm gonna fight you. And Fang D falls right in your wheelhouse anyway. So go ahead, take the top 3.
All right, so I've got 3 of them, 2 ETFs. So therefore, you guys make my work a lot easier when analyzing an ETF. So I appreciate you throwing me the underhanded pitch today. But C&Q is going to be really the only stock out of the 3 so far. Resource stocks, so obviously, resource stocks have been hot for quite some time. We'll take a look at the chart, see what that tells us. But right now, the stock looks good from a fundamental standpoint and from a technical standpoint. The stock is undervalued, has a buy rating, has great long-term potential, has less risk than the average stock out there, and it's in a really nice, strong short-term uptrend. Looking at the other 2, Gush, all you need to look at whenever you're analyzing any ETF inside of the VectorVest software is the RT. Both of them have RTs above 1, which means both of these ETFs are favorable right now, or means they're making you money. So that's really all you need to know with Gush or FNGD. Now, if you want to try to get speculative and try to predict and all that fun stuff by looking at the charts and seeing what the technicals are telling us, we can do that. I do want to change my layout for this, so I got to find it.
It's somewhere. It is there.
I know.
There it is.
It's buried. There we go.
It's not buried.
All right. So C&Q, I like the chart from what we're seeing right now. You did have a bullish divergence where price was moving lower. The MACD was moving higher. Well, you got the run up. Now you've blasted through 2 levels of resistance, pulling back a little bit here today. Right now, it looks good, but at the same time, if we do see a pullback, I'd keep an eye on this level, see if it can retest it to see if it can hold that point. Oil stocks are doing good. You've got a lot of upside still to go, but it's not just going to go straight up right to that level of resistance. So depends on your time frame on it. Short term, it is a little overextended. We may see a slight pullback. If we do, I'd look to see how it handles that level of support to get a better sense of it. So if you're already into it, that would be a good line in the sand if you're wanting to draw yourself one of those. Or if you're not already into it and you're thinking about getting into it, with the look on today's candle, wait to see if it pulls back, see what tomorrow brings. Tomorrow will be a good, insightful day for you. See if it, continues this pullback, and then watch how it retests. If it bounces off that level, that would be a new entry if you're not already into it. I think that's really the best guidance you can give on that one.
Deborah says, I always thought when RT reaches 1.8, it's exhausted. That's not true. It can get to, and even if I've seen stocks in a good uptrending market have RTs at 2 and stay there for a month or 2 because the market is running. It just tells you that the stock is really pushing the gas pedal high. So I don't think that we've ever put out that when it gets to a certain number that it's exhausted, because if a good uptrending market, you're going to find a lot of stocks get very close to 2 and stay there and keep moving up. Go ahead.
All right. So Gush, basically giving you the same look as C&Q. Both of them oil-based. Seeing the same type of look right now. A little bit of weakness. This one, you do have resistance. So this one's a little bit easier to see. You have resistance right here. Where is that? 198 or so?
198, 197.46.
Somewhere in that range?
Yeah.
You got pretty close to that zone as of today's high of almost 190. So I would call that, on a $200 stock, you're inside that zone. Need to be careful at that point, pulling back a little bit. Keep your eyes, if you look at the MACD, keep your eyes on the MACD. MACD values are thinning, meaning the MACD and the signal line are getting closer, which tells us that momentum may be starting to wane a little bit here. So I'd be careful for right now, especially with, and I'm not going to get into the politics of this, but especially with the strategic reserves being pushed out into the open market for whatever reason.
There's a reason.
For whatever reason, shut up, Glenn. You need to be careful of that. Right now, with oil that shouldn't be put into the markets being pushed into the markets, that's going to drive prices down artificially. Artificial doesn't hold up, though.
And OPEC is really pissed at us,
that
too.
That rebound will just make it will honestly just exacerbate that rebound and make it even more, what's the word I'm looking for? More exaggerated, if you will. So don't get too caught up with that. If money's going to be pushed into or if oil is going to be pushed into the oil markets for a short term, wait until that oil, you see the effects of that oil starts getting pushed back down a little bit. Use that as your opportunity to buy into it. Because once that extra is done with, expect prices to continue to rock and roll.
Amen to that.
And if not, and at a exponential rate as well. It's not going to be linear. It's definitely going to be an exponential rate. And then FNGD.
That's an interesting looking chart.
You're seeing the pullback. You have the lower high. And as we talk about, lower highs tends to lead to lower lows. But right now, you are trading right at a support resistance zone. I have to take that off so we can see that here. What is that?
66.59.
Yeah, that number, what he said. So you do have it consolidating right at that support. It looked like it was going to get confirmation and get follow through, continue to move lower. But once again, with potential coming up, a lot of economic news coming up in the near future, either today or tomorrow, I think it is, this could be the catalyst to quick reverse move higher.
But aren't these stocks going down? Aren't the stocks in here going down? And if they are, huh?
Not all of them.
Okay.
Netflix had better than expected earnings. Tesla wasn't great, but wasn't terrible.
I see a lot of buying pressure on the candle, but it is right at that level of resistance.
So yeah, I mean that's the thing. These tech stocks, the reason why, and this really gets into the mentality of what I was thinking about coming up with Monday's video. Tech stocks, folks, whether you want to admit it or not, are completely fueled on debt. That's what has driven these prices of these stocks, these big tech names, to astronomical levels over the last decade. With cheap interest rates, they were fueling their companies with pretty much free money. And now that interest rates are starting to go up, companies are cutting back. That's going to hurt tech stocks more than anybody else out there. So with that potential that the Fed may be, that false optimism once again, as people try to convince themselves and try to convince others that the Fed's going to reverse policy with no proof whatsoever, you're going to see, the FANG stocks and tech stocks in general start to come back a little bit. Then all of a sudden, when Powell comes up on TV next time and says, oh, yeah, I don't know why they're saying that. I'm sticking to my plan, just like I've told you guys for the last 9 months. Then the market corrects, the market continues to go down. Then FNGD will be a great play. But for now, with this false optimism that's floating around the markets the last week or so, I'd be careful and just wait closer to that Fed decision and really get some guidance from the Fed on what they're planning before taking advantage of it one way or the other.
Folks.
And I think that was it on my 4 or my 3, however many.
Real quick, if you guys have appreciated the conversation that's gone on between Patrick and I today, type a 1 in the room. I love having, sometimes spirited conversations are good for the purposes of just, neither one of us are robots. We are both free thinkers, and we look at the markets. We look at stocks a different way, but there's nothing wrong with that, And I hope that Patrick takes away from this that I wasn't attacking him.
I feel so attacked.
Well,
I'm going to have you canceled.
You can get over yourself.
I'm going to have cancel culture come after you.
Whatever. Let him come on. I will. I will. I will do
Wait,
something.
let him
I
come
don't know
on.
what I'm going to do. I'll
Wait,
do
let him.
something.
Wait,
I'll
where?
send Joey after you.
Where do you want them to come on at?
Don't know where. Don't be starting that. Don't. Look at that. We got over 100 likes too. Thank you for that. All right. Today is one of those, the discussions and using the software and having this community is just awesome. Great job, guys. There you go. A difference of opinion is what makes a market. That's true. I believe 1 basis point is coming up next. I've been saying that for the longest time, Tyree. We'll see if it happens. All right. So I got the bottom 3. Real estate, DRV. I still think with the higher mortgage rates, a lot of people are not building new homes on new property, so real estate is going to take a hit. But of course, with a triple leverage contra ETF, when the market's going up for 4 days in a row, it's going to get hit. I still think that overall, the story with mortgages is not changed. I still like the trade. I actually took off my DRV trade a couple of days ago because I have an idea that when the market is up for 2 days in a row, I want to take off my contras. I'll give them 1 day. But if it's up for 2 days in a row, I take off all my contras. So I took off all my contras. DRV was one of them. I took them off. And what is it doing now? It's going up. We'll see. As the market goes down, as the bad news about what's going on with mortgage rates still is prevalent in people's minds, DRV is still a good play. Tesla Motors, way overvalued. I saw that they were doing something,
They cut their prices 9% in China because they're getting more competition.
There you go. Thank you for that. Well, they're trying to sell cars. They're trying to sell cars and people ain't trying to buy them. And so a little bump up today. The stock is still a sell recommended stock. It's still definitely above value, still overvalued. Home Depot. Interesting that as you go through recessions, people are probably going to look at or not. If they're not moving, they're going to try to update their homes. Home Depot, Lowe's are probably 2 good stocks to keep your eyes on from that perspective. Down today, a hold recommendation, good upside potential, good safety. It is in an uptrend, not in a big uptrend, but in an uptrend, and still growing their earnings at a clip of 15% a year. It's slightly overvalued. So why? I think that many of the stocks, for the most part, that are overvalued are stocks that people are just putting money into because where else are they going to put their money? They ain't going to put it in the bank. They're not making enough interest on it. So they're not going to put it in the bank. Still not yet. So you'll notice that a lot of stocks within the VectorVest software are overvalued. This means that people are willing to pay a premium to own the stock. But fundamentally sound, the 2 stocks that I have in here are fundamentally sound, but Tesla's getting smoked by way of RT. It's not in an uptrend, so it is a sell recommendation. But Tesla still overall is a good quality company. Let's right-click, view the stock graphs. Let's pull those up real quick. Put this on a 3-month graph. Let's take off Patrick's crappy his layout, and let's go put
the greatest layout of all time.
Whatever. Let's go put these on my swing where I'm looking at the 20-day exponential moving average. Drive was doing great. Good opportunity. Again, I got out a couple of days ago because the market was moving up for 2 days in a row. Look at that big pull. Now somebody asked, do I still hold it? Well, look at this gap. Let's look at this level of a gap sitting at the value of about 63.11. And it hasn't faded the gap, even with all this pullback. If you're still in it, I would say let's wait until see if it can hold that level of 63.11. The volume is pretty steady, still under the 50-day moving average, but pretty steady overall. I'm going to use this level of 63.11 as a level of support. If it breaks below that, I'm going to tell you probably need to think about getting rid of it. Next one is Tesla. This wasn't an earnings. Where's earnings? Earnings is here. Gap down after earnings, but reclaiming, faded the gap right at a level of resistance of 229.96. Earnings is popping over a little bit, but still much higher than it was 3 months ago. So knowing that the company is a solid company overall, let's see if it can get above this level of 229.96. Then it's got another level of resistance, and then it could move up. A lot of this is going to be dependent upon deliveries and sales. If they're cutting sales in China, it's trying to sell more cars to build up the bottom line. Let's go to the last stock, which is...
So one question about Tesla real quick, Glenn.
Yo.
When do you think Elon Musk is going to start rolling out his extended car warranty program?
I don't know. I don't think he's going to do that.
I mean, with his new satellites, he's going to be able to get anybody that he wants to be able to connect to their phones, be like, hey.
Oh, so he's going to be calling you on your radio and say, hey, by the way,
yeah.
we've been
I'd
reaching
like to
out
talk
to you
about your extended car
Oh
wars.
my gosh, I would rip that radio out of my freaking car in a
That's the
heartbeat.
next Tesla business model.
I would rip my phone or rip my radio right out of my car. That'd be funny though. Home Depot. This is not an earnings play. Earnings is coming up soon, it looks like. Also, it's interesting how a lot of these stocks are coming up to those levels of support or bouncing off support or coming up to levels of resistance and stopping. Right at 290.83, level was drawn in the VectorVest system. Where does it stop each and every time? In order for Home Depot to show me something, I needed to show me something as well, and that needs to get out of this channel. Earnings looks good. The company's got good earnings. So Tesla has a gap back in September 30th to October 3rd. Yeah, I just looked at the most recent gap, which was here. Here's another one. You're right. Here's another gap right here. It needs to fade that one too as it goes up through these headwinds. But I'm looking at the first one here, the most nearest one. It did break up above it, but it stopped right at the level.
So one thing though, I would point out with Home Depot, and it also goes the same guidance for Lowe's as well. Those were COVID stocks.
Yeah.
Everybody was staying at home. They were doing their own thing. The numbers that they're trying to compete against from coming out off of the pandemic are going to be unsustainable. So the expectations are too high. Plus right now with people cutting back on spending, the only thing Home Depot and Lowe's really have going for them this time of year is selling Halloween decorations and Christmas decorations, stuff to put in your house or to decorate your house. People are going to be cutting back on that.
And people are probably going to be cutting back on home remodels too.
And I think that's going to show. So I think Home Depot and Lowe's still may have some downside just because they got overextended because of the pandemic.
So are we in a pandemic? No, not anymore. So that's all I got to say about that. Lieutenant Dan. That's all I got to say about that.
You ain't got no legs, Lieutenant.
You ain't got no legs. That's messed up. Oh my gosh. You can't say that. Oh my gosh. Sigh. I'm apologizing for Patrick.
Oh,
all right. Put us on our final screen. We're done. There was a lot of good talk. Some people left. A lot of people.
And for all you guys still here, I want you all to know Glenn and I have been working together since I've been here. So that's been at least coming up on 12 years now, pretty soon. So if you guys think that we're going hard on each other, don't worry.
Absolutely not.
We both understand each other pretty well. We've worked with each other long enough that there's never any hard feelings. It's all in good fun. So hopefully you guys don't get too
worked up over it. We're professionals. We play professionals on TV too. Oh, this is sort of like TV. So we're playing professionals on TV. All right. I saw that Ethereum is up 5%. I did see that. Patrick says he's going to talk. Don't miss out on that. Bless you, Joey. Don't miss out on that. Patrick said at 11 o'clock he's going to talk a little bit about crypto. You don't want to miss that. Actually, I don't want to miss that because I want to know. Glenn's moving the market. You trying to say I'm fat? Is that what you're saying, Ron? Is
that why you prefer taking the bottom?
Oh, Joey's going to let me put my hat on. Oh, man. There we go. Thank you, Joey. Joey's let me put my hat on. I'm on this hat kick right now. But here's my hat of the day. Why not more likes? Listen, we got over 100 likes. I will take that. All right. Patrick's going to sign us off today. Patrick, remind him about tomorrow, though. Friday.
Yep. So we've got a lot of reminders. First and foremost, thank you all for hanging out with us today. Thank you guys for showing your support at the channel. We love the VV Nation community. We couldn't be here without you guys. So thank you once again. We truly mean it. On that though, we do have tomorrow. We have a lot of stuff going on at 11 a.m. Eastern. I have our mobile coaching stream. We're going to be doing a blast from the past, taking a look at some stuff, recapping some of the stuff we've looked at throughout the years that we've been doing this. Revisit some things that maybe some ideas for you guys going forward. And 2, Glenn does also have his training Thursday at 2 p.m. tomorrow as well. So come back, hang out with him. He's going to talk about all the headlines that are having an impact on the market. So that way you guys can stay on top of things there with that. And then also this week on Friday at noon Eastern, right here on the YouTube channel, we have our second Trading for Charity stream. Yesterday was our first one, kicked off. Didn't have the best market conditions by the time we were trading, but I'm thinking Friday will probably be a little bit better. So I'm really looking forward to that, especially with options expiries. Should give us a little bit more volatility to have some fun with. But already starting off with a great kickoff here.
How about today? We got an extra couple $100.
Yeah. Plus, also thank you guys for Mark, and also who was the other one? Tyree. For donating. Appreciate that. All of that is going to go towards Levine Children's Hospital. Everything that we have now is going to be going towards Levine Children's Hospital. We're going to do that video again like we did last year, where we get to go out and do some Christmas shopping. All of that money will be going to toys for them. Plus, you can also use that other link to donate directly to Levine if you want to do that way as well, whatever you prefer. So make sure to tell all your friends, tell all your family, come hang out for our trading for charity event on Tuesdays and Fridays at noon Eastern, because it's a great cause. It's a great way to learn how to take control of your trading. And there's no reason why you shouldn't come hang out, because we're just trying to make this holiday season brighter for the kids that really need it the most. That's really our main goal with it. So I hope to see you guys there on Friday as well. So on that, thank you all once again for hanging out with us. Hopefully nobody took Glenn and I too seriously today. We've had some hecklers today, but you know what? We made it through. We've had a good time, and I hope you guys did as well. So once again, thank you all for hanging out with us today. Be safe out there. Take care. And until next time, toodles.
See ya.